Welcome to this week's look at the state of the New York City real estate market. This is for the week of April 29th to May 5th. This is a very interesting market right now in New York City, and I'm going to be giving you my thoughts and my recommendations at the end of this report, so be sure you stick around for that. It will be especially of interest to those buyers and sellers who are active in the market. I'm going to get started with the luxury market, as I always do. Then I'm going to move to the Manhattan and then the Brooklyn market. And as always, if you have any questions, please post those below. There were 26 contracts signed in the luxury market. That is 3 fewer than the previous week. However, interestingly, 8 of those were in the trophy category, meaning they were priced at $10 million and above. The number 1 contract was West 25D at 500 West 18th Street. It was asking $13,770,000. It was reduced from $14,085,000. It is a corner condo unit. It is a brand new unit. It has just under 4,000 square feet. It includes 4 bedrooms, 4.5 bathrooms, and a 30 by 32 foot great room. This is a building known as One Highline. It has quite an array of amenities that include a fitness center, a 75-foot lap pool, spa treatment room, golf simulator, children's playroom, private dining, games lounge, and a garage. The number 2 contract was a townhouse at 5 East 10th Street. It was asking just under $13 million. It was reduced by $1 million when it was first listed back in January of 2023. It's a 5-story, 25-foot wide house. It was built in 1890, and it has just under 10,000 square feet. It has some very nice features, 7 fireplaces, also has beautiful bay window on the brick facade. However, the entire home needs to be completely renovated. The total weekly asking price sales volume for last week, $215,786,250. Average asking price, $8,299,471. Median asking price, $8,940,000. Average discount from original ask to last asking price, 12%. Average days on the market, 797. That's it for the luxury report for last week. As always, any questions, please post them below or reach out to me directly at Sotheby's. We're going to take a look now at what happened last week in Manhattan. 483 properties came on the market last week. That is up almost 14%. 207 contracts were signed. That is down almost 7% for the week. 187 properties came off the market. That is up over 65%. The 1-month supply rose 1,976, down almost 3%. Contracts signed 952, down 11, little over 11%. And the off-market properties, 553, rose about 14.5%. So what does that all mean? If we look at this market pulse, we see we are dropping. We were in quite a neutral place, but we are down a little over 1% from last month, and we're up a little bit, 1.5% from last year, but we see we're kind of dropping at the end of this chart. If we look at the liquidity pace chart, 30-day moving window of contract activity, we see we're at 952. For the last 30 days, we'd like to see this over 1,000. However, we are not there. We're down about 7.5% from last month, up from last year, but still, you can see we're just kind of hovering in this neutral liquidity. I'd like to share this Manhattan April recap with you. This is a bit of a forecast of what I'm going to be talking about at the end of the report. We look to be stalling out a little bit in this spring season in Manhattan. You can see this kind of month over month down moves in the market pulse, the climate index, the liquidity, increases in the number of price cuts, and the level of net inventory. So that's where we are at for the moment. If you have any questions about the Manhattan market or anything I just shared with you, especially about this April recap, please post them below, or you can reach out to me directly at Sotheby's. I'm going to move on now. We're going to talk about Brooklyn, and then as promised, I'm going to wrap it all up for you. In Brooklyn, we saw the supply rose by 241 properties for the week. That's almost 29%. Nice to see a little pop there. We've been really short on inventory in Brooklyn. Contracts signed, however, kind of a wash, down a little over 4%, 139. Contracts were signed. Off-market properties rose 60%, 112 for the week. Supply for the month, 972, down 5% for the month. Contracts signed also down a little over 4%, 615. Off-market properties, 289, up almost 38%. If we look at this market pulse for Brooklyn, we see that we're kind of going up a little bit above this, let's call it neutral market. It's up, but not by much. All right. Yes, are we up a little bit? Again, this is more of a reflection of this balance between supply and demand. And since both are a little wonky, we're kind of seeing this little wobbly movement in the market pulse chart. I think what is interesting, though, here, if we look at this liquidity pace chart for Brooklyn, the 30-day moving window of contract signed 615 is showing we're kind of flat in Brooklyn, kind of going sideways, not even 1%, down from last month, although down from last year, almost 7%, but we're kind of flat, neutral liquidity in Brooklyn. But is that the story? Let's look at this Brooklyn April recap. The fresh April charts are in, suggest that the Brooklyn market may be kind of cooling off again. So while this Brooklyn market is definitely better than several months ago, as indicated by the higher market pulse, climate index is down and price cuts and net inventory are up on a monthly and a yearly basis. Okay, that is it for Brooklyn. Now we're going to shift, take a look at this kind of market in total, talk about what's going on, talk about these shifts, talk about the strategies that are going to help you be successful. Any questions about Brooklyn specifically, reach out to me, post your questions below. You've been hearing me say that this is very much a tale of two markets. You see that the luxury market is marching right along. Why? Because this is kind of an all cash part of the market. And we see 26 contracts signed. That's a few fewer than the week before, but 8 of those were signed in the trophy category. That is very impressive. And 16 of those were condos. Interestingly, the co-op number rose a bit proportionally, we don't see that a lot. 6 of them were co-ops. 1 was a condo, 3 were townhouses, and it was a split between where those contracts were signed. 13 were uptown, 13 were downtown. We did see the rates come down just a little bit. Perhaps that will help with what's going on in the rest of the market. However, what we have been seeing, unless something changes, yes, we remain in this neutral market. However, based on deal volume, this market is not shaping up to be a very vibrant spring market. It seems to actually be kind of stalling out a bit. If we look at the supply in Manhattan for last week, it rose a little over 13%, well, 13.6%, 453 properties came on the market. It's slowly increasing. We are inching our way towards that projected 7,500 that we should reach sometime in June, at which point we should be kind of peaking out and we shouldn't expect to see a whole lot more inventory coming on the market until the fall. In Brooklyn, we saw kind of an even bigger pop, almost 29%. 241 properties came on the market. However, we also see a kind of a flatness in the inventory. We remain at this kind of 3142 in total because it's kind of getting absorbed, right? So, I think that from a supply standpoint, Manhattan seems to be a bit on trend, though not gangbusters, and Brooklyn seems a bit flat, in part because you see a lot of people in Brooklyn are taking their properties off the market. Why? We don't know exactly, but most likely it's because they had their properties on the market and they weren't getting the prices that they wanted, so they decided not to sell. That would be my guess, based on an educated guess, because that's usually why people take their properties off the market. They aren't successful and they decide they're going to do something else. Wait it out, rent it out, live in it. We don't know. Okay. If we look at the contract signed, Manhattan, down almost 7% for the week, 207. This, you should note, is the fourth negative week in the past 9 weeks. This is what I mean about a pokey market that seems to be stalling out in terms of buyer enthusiasm. We were supposed to see an adjustment to those mortgage interest rates. It didn't happen. Buyers retreated again. Now that we're starting to see maybe a little bit of good news on that front, perhaps we will see buyers re-engaging. We'll have to wait and see. Brooklyn, down almost 4% for contracts signed, 139. The demand may be shifting from, let's say, going sideways to negative, more negative interest. What does this all mean? Let's start with the sellers. The market is definitely improved from last year. We definitely took a hit. Last year, we were down 10, 12%. We seem to have regained some ground. We saw definite signs of improvement up until about through February. Then we started to see decline in deal volume. What we can say is historically, the spring market goes through the end of May, maybe a little bit into June. So if you are a seller, we see signs that this market is fading. It is becoming more challenging for sellers. So what can you do about it if you are a serious seller and you want to get your property sold in this market? Well, the first thing you do is you look at what's been happening, and if you are not getting the activity that you want and you are not getting the offers you want, adjust your price, do it now. You have about 5 weeks left. Do not think you should wait around until June, because in June, many of the buyers go away and the buyers that stick around become predatory. They think that the people who did not sell in the spring are going to get worn down and that they won't have as much competition. So they're going to start to make offers, but those offers are not going to be as strong as they would be in the spring market. Sorry to be the bearer of bad news, but this is the information that you need. Now, if you don't want to be a seller in this market, you can do what other people do. Take your property off the market. Sorry if that sounded a little harsh. Okay. Buyers, if you take what I just said to the sellers and flip it around, there may be some new opportunities in this market because we do appear to be stalling out a little bit. The other thing you should know before I get into opportunities is the prices do seem to have stabilized from last year. So don't think you're going to get a big steal of a deal. I mean, maybe you might find one seller who is totally desperate and they're selling a house and not a co-op or a condo, so they can kind of just sell it for whatever they sell it for. But for the most part, prices have stabilized since last year. We have regained some ground. The deal volume is slowing, though, so there's probably a little more negotiability. That's one area of opportunity. As I said about the summer, if you wait until the summer, you may well have even more opportunity. June, July, August. Likely less competition, likely more opportunity. Those properties that have been sitting on the market, those sellers are going to be ready to be done, very likely, and perhaps more negotiable. So that would be my advice. The rates seem to be doing, I don't know, they seem a little better. I don't really know where they're going. And hopefully they improve a bit. That would be very nice for the buyers and very nice for the sellers. It would help change things to increase the deal volume, get people re-engaged with the market, help buyers and sellers get a little more traction in this market. Okay, that is it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Diggs and the Olshan Luxury Report. The work that they do helps me to help you to make great decisions. I will be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.